Adoption of IFRS in Nigeria. Now, before starting this session 4, don't forget that what we did in session 3 is to discuss IFRS itself. That was the only thing we did in session 3. Discussion, International Financial Reporting Council. And in doing that, we also discussed the sub-bodies of IFRS, like the IFRS Interpretative Committee, the Standards Interpretative Committee as well. We all discussed that. They form, a part of the bodies that are responsible for developing high-quality accounting standards, that is being used across the world. We also look at the role of the Interpretative Committee in providing, as explanations and resolving contentious issues in the course of applying International Financial Reporting Council. So session 4, we're going to look at IFRS itself in Nigeria. Adoption of IFRS in Nigeria, session 4. So the history of accounting standards among nations of the world differs. In some countries, professional bodies are responsible for formulating the accounting standards, while in others, government agencies, take up that role. In Nigeria, some accountants who, some of the doyens that we know, the flag bearers, that we know in accounting in Nigeria, some of them were trained outside the country, and they all came back. Some came back in 1960, that's after independence, and when they came back, they brought that knowledge home. They were the one that gave birth to, the Association of Accountants in Nigeria. All right. So in 1960, the Association of Accountants in Nigeria was birthed, and we saw that this was as a result of those accountants who came from overseas, after their studies. Now, it is the Association of Accountants of Nigeria that actually gave birth to ICA in 1965, under the Act of the Federal Parliament Act number 15 of 1965. They formed, the Institute of Chartered Accountants in pursuance, to the mandate for the creation of an accounting body. All right. So that is a short history of accounting here in Nigeria. Now, one of the bodies we are going to look at under this topic is Financial Reporting Council. Financial Reporting Council. Now, before the Financial Reporting Council, what we had was the Nigerian Accounting Standards Board. Nigerian Accounting Standards Board was responsible for developing accounting standards that meet the need of accounting here in Nigeria. All right. So this board, Accounting Standards Board, metamorphosed to Financial Reporting Council of Nigeria. And this happened when Nigeria was set to adopt IFRS. So the act that gave birth to Financial Reporting Council in Nigeria was passed in year 2011. The act that established the council, for the council that oversee and control the activities of Financial Reporting Council. Now, looking at the act that gave birth to Financial Reporting Council, there are key things we need to take from there. Now, the objectives include the following. The objectives of certain Financial Reporting Council of Nigeria include the following: develop and publish accounting and financial reporting standards that are observable in the preparation of financial statements of public interest entities. All right. 1. Develop and publish accounting publish accounting reporting standards that will be observed in the course of preparing financial statements that are meant for public interest entities. 2, they are also responsible for reviewing, promoting, and enforcing compliance of the accounting and financial reporting standards that is being adopted by the Council. Thirdly, they receive notices of non-compliance with approved standards from preparers, users, and other third parties, such as auditors and things like that. No, so that is that. We have looked at, how accounting body, the history of accounting body in Nigeria came to be. We have looked at it from the point that the Association of Accounting Bodies in Nigeria was formed by those Nigerians who studied abroad, who came into the country and after the independence, and they had to come together to form that body. It was that body that gave birth to ICANN, which is the Institute of Chartered Accountants, in 1965. And we went further to look at another body, which is the Financial Reporting Council of Nigeria, and we say that the Council, Financial Reporting Council of Nigeria, was actually the predecessor of Financial Reporting Council of Nigeria is the Nigerian Accounting Standards Board, which was responsible for developing accounting standards and all that. So we have looked at that, and we have also looked at the objectives of certain of Financial Reporting Council. So now we are going to look at the reasons for adopting IFRS in Nigeria. Why do we need to adopt IFRS in Nigeria? Recall that before IFRS was adopted in Nigeria, we had our own Nigerian accounting standards. We had our own Nigerian accounting standards that are tailored to the peculiarities of the businesses that we do, to the peculiarities of the need of the accounting profession here in Nigeria. So why do we need, or why did we, jettison the accounting standards and adopt IFRS? Well, one of the reasons is to encourage compatibility, reliability, transparency, and efficiency of Financial Reporting Council. Recall too that when we had what we had in session 3, we looked at IFRS, we defined IFRS, and we look at the objectives of IFRS, and we find that what the IFRS is meant to ensure comparability, enhance reliability, enhance transparency and efficiency of financial reporting. All right, that is the same objective that its adoption is meant to serve here in Nigeria. Secondly, it is meant to assure investors, all over the world, to assure investors abroad of a meaningful decision on, on their portfolio investment. Recall that IFRS is a generally acceptable, accounting standards, generally globally accepted, accounting standards. So adopting it in Nigeria here is aimed at assuring investors, across the world that they have, we have a means of communication that will be useful to them in their portfolio investment. Thirdly, it is meant to reduce the cost of doing business abroad by eliminating the need for supplementary information from Nigeria. All right, this is saying that when you prepare your account in line with the Nigerian accounting standards, and this account is being reviewed by somebody in the US, there will be need to, to carry out, additional work on that very account, either by eliminating certain things or adding certain things and things like that. So there has to be another professional work that will be done on that, which will increase the cost of, doing business. So by adopting IFRS, we are saying here that will eliminate that very cost, as that investors will bear if they were to, use our local standards. Fourthly, it facilitates consolidation of financial statements of the same company with offices in different countries. We are saying here that multinationals who operate in different across the world, that adopting IFRS, which is a globally accepted financial state guide, a globally accepted standard for reporting financial transactions, that by adopting it, we are saying here that multinational companies will find it easy to consolidate their financial information, make use of financial information coming from across the world, including Nigeria. So multinational companies will now avoid the hassle of going to restate their accounts, that is in the local GAAP, to meet the need of to meet their own needs. So that is being eliminated by adopting IFRS here in Nigeria. So issues arising from IFRS adoption. One of the issues arising from IFRS adoption here in Nigeria is lack of adequate training and education. Lack of adequate training and education. We see in practice that IFRS usage requires some skills, requires some education. So in the course of adopting and implementing IFRS in Nigeria, one of the issues that has come up both in the private sector and in the public sector is that adequate education and training need to be carried out for all stakeholders, whether it is auditors, whether it is the preparers of accounts, whether it is the users. There is the need to have adequate knowledge of IFRS to be able to understand the message that is contained in it. So that is it. One of the issues that we are talking about here is that there is no adequate education and training. Secondly, conflict with tax laws. Tax laws in Nigeria, have some peculiarities. So we find out that when you adopt IFRS, there are tax issues that will arise. Tax issues that will arise from converting from local GAAP to IFRS. If there are issues that will definitely arise. So these are some of the challenges that that's associated with adopting IFRS. Accounting issues that are likely to present significant tax burden on the adoption of Nigeria, and this includes issues like impairment, issues like loan loss provisioning, and investment in financial instruments, because under IFRS, there are treatments, prescribed treatment that you will apply to some of these things, and by the time you convert from local GAAP to IFRS, the result gives rise to tax issues, and that's why it is a challenge. Now we look at issues of fair value. Fair value used under IFRS as a means of measurement of financial instruments. And fair value, you are talking about using market value in your own in valuations, in valuation of assets. So, and usually what we find out is that fair value leads to volatility. It leads to volatility because market itself is associated with volatility. So if I have a price, as at end of May, and today I have a different price that is higher or lower, so you can see that there is there will be a significant change in the valuation of assets and liabilities. So where this adjustment is reflected in income statements, as gain or losses, it usually brings about contentious issues, about whether those losses and gains are they, whether especially the profits, whether they are distributable profit or not becomes an issue. All right. So management compensation plan is also one of the issues that that will arise in adopting IFRS, because the new financial statement reporting format, if they say under IFRS that that is different from GAAP, the terms and conditions relating to management compensation will have to change, because issues of management compensation under GAAP is different from IFRS. So this is also a challenge. Reporting system. Companies need to ensure that existing businesses, existing reporting model, is amended to suit the disclosure requirements of IFRS. So reporting systems, would normally change, under IFRS, and it becomes also an issue to look at. Issues of scale. Implementation barriers associated with the cost of compliance, especially for small and medium entities, is also an issue, because a small entity may be defined by small capital and things, and other factors. Converting to IFRS may encounter some cost that will be difficult for them to bear, and then that affects compliance issues in IFRS. So that is what we have learned under this session, which is section 4, adoption of IFRS in Nigeria. The next session we have is section 5, and in section 5 we are looking at the multinational companies, multinational corporations, multinational